So, hello everyone, and welcome to this new episode of Smart Outsourcing Talks. And today's topic is going to be very, very interesting. So, the next version of accounting firm. So, how technology and human capacity redefine the scale. So, in 2026, everyone in the industry is talking about the future firm, right? And when we say future firm, most people equals more with the tech or maybe the AI and more automation and stuff like that. But in this context, what is really interesting to me is that despite so many advancement in the firms, still the capacity is always stretched out and they are still overworked. Capacity is still a lingering problem and growth still feels messy. So maybe the question we should ask isn't about which tools we should use, but it is about how we are redesigning the firm, and that is what we are going to do today. Okay, and joining me today is someone who has spent years and years of rethinking what scale actually looks like. So please welcome Ian Vacin. He is a co-founder and chief partnership officer at Karbon. So Ian, welcome to the show.
Thanks for having me on. I appreciate it. I'm looking forward to the discussion today.
Yeah. So let me just introduce you to our guest. So Ian is currently a co-founder and chief partnership officer at Karbon, and he has spent entire life in the accounting, I could say, right? He had worked with Intuit, with Zero, and co-founded Karbon. So it's a long journey in the accounting. He's almost having more than 25 years of experience. And he is also now a co-author of Scale with Purpose, the Service Entrepreneur's Guide to the Intentional Growth, where he challenges one of the biggest assumptions in our profession, that growth is just doing more. Instead, it is designing better. What stands out about Ian's work is this: he doesn't look scale as a volume problem. He looks it as a capacity and the design problem. And in a world where AI, technology, and global talent are all reshaping how the firms operate, that perspective has never been more relevant. So, Ian, welcome to this show. And maybe you want to talk little about yourself.
Yeah, so quite a bit of color there. Appreciate that. I'm an industrial engineer by trade. So I studied at UC Berkeley back a long time ago. I'm not going to give my age, but the white on my beard. And then I got a couple master's degrees in engineering and in business. And I worked at Intuit for 10 plus years. I led Zero, brought it to North America for 3.5 years. And then I started Karbon. This is our 12th year. I did do semiconductor manufacturing and optimization in the 90s. That was a little bit different. So I'm very familiar with how operations work, how to optimize and maximize in that. My starting point was with machines. And obviously, when you're talking about accounting in those types of firms, those aren't machines, those are humans. And so the book that we wrote over the last 2 years was to explain how to operations, capacity planning, what are the foundations of that to create an efficient firm? How is that going to have to change and transition in the new paradigm? And how does that work when humans are messy and complicated and difficult? We all are. And so that gives the sort of blueprint about how to actually face the struggles that most firms struggle with in terms of how do we get the maximum productivity and profitability within the firm. That's a bit of a background context.
Yeah. So Ian, let's start here. So today everybody is talking about the new firm, right? The next version of the accounting firm. So it sounds very exciting, but at the same time, it's very vague. So what does the next version of accounting firm actually looks like in terms of practicality? Because you come with over 3 decades of experience in this.
Yeah, I think there's definitely a shift and a transition that's happening in terms of how firms, in terms of size and their segments, and how many firms will be of each one of those particular size segments overall. At the very baseline, running an organization is really, really hard. And you're having to manage how all the different people come together to be able to create outputs. And an accounting firm, you're delivering thought, knowledge, and thought pieces, which makes it that your folks, whether they're using AI or type processes, you're having to create deliverables on schedules. And so it has a production sort of capability and capacity to it. The firms themselves will transition in shape as it already did from how we do outsourcing, how AI plays into that. But the fundamentals of how to run a firm will stay the same. Once you start a firm and you grow to about 8 people in size, that's about the span of control that you can handle as an individual managing 8 people. Once you cross that line, it becomes quite more complicated, and your scaffolding of your firm has to shift. And that's what we spent 2 years on research, and in the book was organizational design and strategy are quintessential for how a firm's able to navigate as it grows in the number of people that it might have. And so that 8 to 20 person size is where everything comes to a grinding halt, as you now need to create departments, and you need to have managers, and you need to be able to delegate and change how you are as an entrepreneurial leader, being one that can do everything to being able to delegate and rely on others. That will never change. Doesn't matter whether or not we're talking today, 10 years from now, 50 years from now. I think there's a lot of different people that can conjecture where things are going. Over the last 3 to 5 years, we've seen a massive acceleration in the amount of firms being merged and brought together in the efforts of economies of scale. And so we're seeing the long tail of the market ultimately, start to dry up as firms get larger and larger across all the different segments. Anytime you get an unbalanced situation, becomes opportunity. And what will happen is as we see it, whether or not the timeframes change, and whether it be 3 years or 5 years, the big will keep getting bigger, but a whole new set of entrepreneurial leaders will come in and be running small, nimble, very tech forward, very capable firms that will sit in that size segment of 6 to about 16 employees in size. And most likely being able to use either high volume virtual teammates or technology to be able to represent what would be pods or teams, being able to do client service deliverables at scale. And that will change the next sort of rendition of how we'll see the market evolve. So that's kind of in the looking glass of things, what we might be able to expect. That's what I would expect to see. But at the foundational level, you still have the difficulty in scaling that will always persist when you're dealing with a team of humans.
And Ian, do you really see that even the structure and the design is changing, the way they are remodeled now?
We saw a shift in the 2010s where there was more thoughtfulness on running. It went from running an accounting practice to running an accounting business. And what I mean by that was, before it was a multi-partner structure where, again, you had different people at different levels in order to just build client service deliverables. And you then ultimately had all the revenue flowing up to the partners, and it was distributed. The shift has been running these more as businesses with proper departments. You'd have a sales and marketing department, you'd have an R&D department, you'd have your operations where your client services would be at, you'd have an HR, a finance team. All those, as you would get bigger, those departments would then resemble what we would typically coach and work with small businesses and medium businesses on, but now being applied purely to the accounting firm structure. As that has evolved, and again, going into running a proper business in a more traditional structure, the next foray is, how does, the AI sort of evolution or era, how does that change that? It doesn't change how the business is going to run. It just changes how, in a world where we have a talent shortfall, and we've had that for 20 something years, ever since I've worked in this profession and I've been tracking it. What you have now is you're able to fill the gaps with automation and technology versus having to try to get a part-time body or having a gap within the organization. And so that's going to ultimately allow for firms to not have to have this sort of feeling and premonition of, I need to get larger, larger, and larger to be able to get the bodies and the capabilities to be able to meet more and more of my clients' needs.
So, one of the things what I notice is that with our conversations in accounting firm, and Ian, you have been dealing with this accounting technology for over almost a decade in terms of Karbon, right? So what I see is that though there are a lot of technology and now AI and a lot of these tools coming in, which increases the efficiency and the way the firms are run, but I still don't see the capacity constraint going down, okay? With the advent of technology, with the advent of new modern tools, still they are struggling with the same capacity challenges. So what do you feel, where is the gap?
At Karbon, we've done the state of AI and accounting report for the last 3 years, measuring and monitoring how firms' behaviors and their attitudes and whatnot have shifted over time. We are still, to be clear, we are still and will be in a talent shortfall. So if we were in a different industry where we had talent abundance, so we had a supply curve that was different, then we'd be talking about maybe displacement or other sort of changes. But we're not here. We're talking about enablement. And for small businesses, their client demands have only increased since COVID. And so your supply and demand curves are not matching how we would want them to match. And what that means is there's opportunity. From a Karbon standpoint, when we built the product 12 years ago, it was really trying to understand and help with the operations and the management of what happens within the firm to be able to make sure the right person in the right place at the right time doing the right thing in order to drive the right value to maximize profitability. What we've learned in that time frame is that most people have a really hard handle on what happens after 2 weeks or 3 weeks of time in the future. Do I really know if I have the right number of people for the work that's out there? The technology helps to provide that, but it's a hard calculation to do, especially when most firm owners don't have a good sense of their revenue. They don't know exactly what their demand is outside the given month or quarter. And so in the book, we walk through the different planning elements from what happens from today, which is your work prioritization, to load balancing, which happens on a month-to-month basis, to your capacity planning, which happens on the quarterly, which then goes to resource planning, which is really a 6-month exercise, to an annual plan. So for me, I've been shocked. As I work with firms, I get the benefit of working with probably a couple thousand a year, is just the lack of planning that happens at the capacity planning and annual planning. And therefore, it feels like you're on a wheel running as fast as you can because you're just trying to stave off all the short-term problems that you have, but you're not taking a step back in the business and intentionally thinking about what are the corrective measures I need to make sure that I alleviate the pain that's coming to me much further out. And that might be not having the right types of bodies. It might not have the right scaffolding in the firm. It may not be that we have the operational rigor necessary for us to ensure we meet the deliverables that we've promised to those particular clients that we have.
So, all this technology, maybe they've solved the problem for maybe the workflows, they've solved the problem of, capacity planning. Still, where is the real gap, So is it not able to look at the demand or, what is the customer expectation and how to fulfill them? So is a planning a problem? Is utilization a problem? Where is the problem in capacity?
Misunderstanding of what you have for your inputs and your outputs. To be clear, I run a technology company, but a technology is an accelerant. It either makes a bad system worse or it makes a good system better. And so that is where it comes down to, is understanding the fundamentals of what your business is and how you operate. So in terms of most firm owners, they don't have a good sense of, let's say, Manoj, you and I are on a team together. You contractually agree to work with me for full time in a given week, and we determine that that's 40 hours a week. Okay. And now I assume that those 40 hours are going to be applied to actual billable work that's going to be done. But that's not the case. I stick you in a bunch of meetings. You've got lunch that you go to. At the end of the day, my 40 hours now looks like 32. Okay. So now let's say I use the 32 number. Well, the 32 number is not accurate either, because every person has a good day and they have a bad day. Okay. I could have woken up like my coworker did today, and his child was basically sick and he was up all night dealing with that. So now his productivity on the given day now has gone down even further. People go out sick. They unfortunately have other things. So your capacity is not really 32. We talk about in the book, we use what's called the MELT model, which is your mind, your emotions, your location, and your time constraints. And we need to now be able to reduce that even further. So your 32 actually might be 26 hours now for the week, because we've had to take these different things that are unique to the person into account. So now we're at 26. So that's our expectation of what our top line is. But at the end of the day, something's always going to go upside down or sideways or left or right. And the reality then is we might even need to have a buffer on that. Let's call it 10%. So now I'm down to 25 hours at best. Let's call it 24. That is a very different scenario than the 40 that we started with. And most firm owners don't think about the fact of all the different weights that happen on those resources. So if you multiply that out on a 15-person firm, well, now I'm at 120, essentially I was at 320 I'm now down to essentially almost 50% of that. And so that is where the big problem stands. You can have a great system, you can have a great understanding of what it is, but unless you're taking the reality of how you work with humans, now you've got a situation. So we walk through again the understanding, what is your serviceable hours? What are the organization hours? What are all the factors that you then need to discount to be able to get to what your true capacity is? And that has to ultimately match up with the revenue that you've actually promised or you've delivered or you need to deliver. Because if you over buffer, now you have a low profitability firm. You're ultimately, you have resources you're not using. If you've ultimately undercounted that, which most firms do, the only way I can solve that in the moment is overtime, or I'm scrambling for resources, paying at rates that I shouldn't be paying for, which again, it's profitability, but most likely will also lead to employee churn, lower quality of deliverables. All these things make to a bad recipe overall.
So I like the term which you use, so organizational hour and serviceable hour, when both are two different things. I mean, not many firm does think in this way.
No, I mean, the reality is you have to work in the business and on the business and for the business. And so you need to have an honest conversation with your staff of what the requirements are. If they're a manager or they're an executive or director, let's be honest. We go through in the book and we give what the typical allocations of that would be. If I'm an executive, I'm probably only spending on the service side of the business 5 to 10% of my time. If I am a staff member, a team member, so I'm at the other side of that range, I'm doing somewhere between 75 to 90% of my time on the service hour side and very little on the organization. And again, that's the reality of the scaffolding of the firm that you need in order to be able to have a team member, again, a staff, a manager, a senior member, and then an executive. And so that stratification, we call them stratas, help you to get a true vision of exactly what can you deliver with your firm based on the size and structure that you ultimately have to put in place for you to run a well-oiled and efficient machine.
Very, very interesting point, Ian, you brought up. Okay. So coming to, talking about the technology, so today, firms have this more tools than ever, so many options to choose from. But capability doesn't mean the better outcomes. Okay, that more technology doesn't mean it will translate into an efficient outcomes. So how do you see this correlation between the use of a technology versus enhancing the outcomes?
So I've been running a study for 8 years now called the Karbon Practice Excellence Study, and it measures what firms, we look at the different firms and which ones are leaders, which ones are laggards. We look at quartile analysis. It does a really sophisticated understanding to understand the business operations of the firm and what defines, we use revenue per employee to define what is the creation of value. And then we look at the inputs that the firm uses across its 12 different competencies. And it's interesting, when we did a regression analysis on the data, the only thing that the regression analysis could single out as a variable that determined whether you were a leading firm or a laggard firm was internal training. Internal training was the only defining component that you could see out through all the noise that existed. And so the biggest issue that we have within organizations built like accounting firms, again, with people and humans, where you're not only servicing people, but you're also delivering the outputs with humans, is the knowledge and the ability to deal with change. Change management is the biggest problem that exists. So if you want to do a new technology or a tool because you think it's great and looks cool and could be efficient, it's dead in the water unless you can figure out how to work with your team to adopt and use it correctly and want to lean in versus lean out. And that all comes down to training. When you're trying to figure out how to make a more efficient process of delivering a client deliverable, maybe it's an accounting period to close, a tax return, whatever it might be. Again, it comes back to the process can define how you do it and what order and steps that you do it. But the training is what defines the capability of that process and how efficient or effective it can be. And so technology, again, is a mechanism by which which things can happen in possibly a better way. But it's the people and how effective they can be at their jobs and understand how to deal with the parameters that they're given. And again, every client is different. and be able to work within that to get the most consistent process that's defined. And that consistency is what eliminates a lot of variability, which is, we talk about things like lean manufacturing or Six Sigma. You're trying to deal with two things. You're trying to deal with variability in processes and uncertainty that's going forward in time. And uncertainty is solved with planning. Variability is handled with operations management. And that's and we could talk about that in the last third of the book, but that's what separates those leading firms from laggard firms.
And also what happens is that most of the time the technology, the way they market it is, you'll have this dashboard, you'll automatic, on a touch of a button you'll achieve this. You don't need so many resources, you don't need so many hours, we'll save so much of a time. But nobody really looks at, while implementing a technology, what is the overall cost of. It's just not about buying or paying the subscription, right? It's also about, have you changed the design of the firm? Have you changed the way people are going to work? Have you relooked at it? What is the process changes required? What is the training required? So what is the overall cost of implementing a technology is, right? And that would actually mean then you will take a decision based on that. So in your experience, where Karbon would have, I don't know how many customers you have. So, I mean, you would have gone through so many cycles of implementation with the people. So what's your experience in that, how do firms look at the overall structure of implementing the technology?
It depends on the technology that's being put in place and how pervasive it impacts how people work. And so some solutions, which would be very simple, it might be, maybe I'm doing a mileage tracking app, right? Where it's just like, I'm going to turn this thing on, I'm driving a car. It doesn't require a change of behavior. It just requires the thoughtfulness to maybe turn it on. And maybe it has some initial setup. When you're talking about a work management platform or practice management system, it runs your business. It's pervasive. It's across all things that happen there. And so that becomes a couple things. One is the thoughtfulness in what you choose, because you now have something that's essentially your nervous system or your operating platform. And so it needs to touch a lot of things. And so your decision making there needs to be around, what are the various different things you want out of it? What values do you have? Is it around cost? Is it around implementation ease? Is it around integrations and interoperability, security? There's a bunch of different sort of factors or variables you might put there. Then it goes into, if I'm going to have something that's going to be relatively transformational in how I work and how I operate, then you need to actually put the effort in terms of your own change management within that. The vendors like ourselves will all help, but you have to have the sort of bottoms up and tops down approach within your firm to make a concerted effort that we're going to change, and change is difficult, and highlighting how that change is going to be put in place and the value that you're going to get on the other side. So it's putting a thoughtful champion for what's going to happen. It's allowing for the teams to be able to reinvent the processes that they have. Anytime you change a system, the way the workflow works is different. It'll be optimized to operate in a different way. And especially when you're dealing with a work platform or a practice management platform, it's the moment to step back and do spring cleaning, understand the processes that drive the majority of your revenue or have a high volume, and reinvent them as you're going into the process of the technology. So you can have the best processes built on the best platform, built in a way that's optimized for how you're going to operate in the future. And so that's, again, going back to that previous comment around internal training. You will need to be able to put a lot of internal training in place so that you can create a machine between you and your staff. And so it's not, the change management is the hardest part of that. And that needs to be a very thoughtfully done exercise.
So yeah, you are right in terms of, it needs to be also, what is the type of technology you are implementing, and, what is the change behavior that would bring in. And with that, my next question is that how AI is going to change the way we operate.
It's a pretty large, open-ended point on that. I've been working with Gen AI related things since 2001. We had our first prototype test using a private version of Gemini back then. And we were using simple cases like support, those types of things.
You said 2001?
2001, yeah. I actually worked in a firm in 1999 that was what would be classified as AI today, where we were trying to auto map systems for enterprise level using a way to try to create like a virus would to determine how to auto map. These were called ETL processes back then, so that we have automatic integration. So the technology of what's been going on within this space is not necessarily new. What it's been able to do has been transformed by the computing power that exists and the ability for it to train and be able to accelerate how it learns. That is definitely something that's changed in the last 5 years. The step change that has happened at the end of this last year of 2025 and what can be done at a layer that's approachable to the average person like ourselves has been a massive step change. And that's where we're seeing, well, what does that mean for an accounting firm and what can I do in the future? And that's where, we've talked a lot around, a lot of the manual lower level sort of capabilities, but the technology as it sits today can be best, the analogy can be, it's the best first year intern that you've ever gotten. I didn't take an intern or an entry level graduate in my own company until after I was in business for 6 years, because that intern needs a lot of attention. It doesn't necessarily do what you want it to do. It goes a bit sideways at times. You gotta nudge it along. You gotta monitor and oversee it. And so that's what I think you want to have as an expectation. But if you can teach it the right things, you can get it down the right patterns, it can do those things in repetitive fashion in a really magical way. And that's what, when we think about how we're going to be leveraging AI in 2026, 27, 28 even, it's what are those particular high repetition jobs that we can spend the time to teach it to do it over and over again in order to present us something for us to review, for us to then move it down to that final delivery back to the client. And that's the transformation. So one of the biggest things to think about is our pipeline of new graduates coming into the profession and allowing for them to learn quickly to be able to handle and manage these systems, because the training ground is being fought between those new entry graduates and the AI technology simultaneously. And for the profession at large, you need to be an expert in your craft because that's what our clients are demanding. But we need to be able to ensure that there's the ability for folks to be able to learn those through the hard yards without being too disintermediated from how the work is performed. And that's going to be a struggle for the accounting profession across the globe over the next 3 to 5 years as all of this technology starts to work its way through.
But don't you think the efficiency is disproportionately very high as compared to intern or any humans?
In terms of where we are in this period of time?
Yeah.
Yeah, if you have a good understanding of how to apply it, it is indeed the case. If you don't have an understanding of how to apply it, it can send you down rat holes and you get a suboptimal result. Yeah. And that's where, when I see people and we talk, this is one of those lean in moments to try to play and be curious and understand what can be done. I've had a good example on my executive staff, literally just the last couple of days. And again, we use different tools, but we'll use Claude as an example here. We had the executives say, look at my email, look at my Slack, look at what's in the various different systems we use to get work done individually, and ask the AI, what can it do so that it could actually automate or be able to create repeatable processes that I wouldn't necessarily need to do. It actually can do that. And it can actually then help you put in place mechanisms to be able to handle that at a repetition fashion. What does it do? Well, it frees me up to be able to make better business decisions, look at information at a higher scale. Those are the types of things where you could not do that 6 months ago. I could not have something evaluate how I operate, what I do, and give me a very painful reality and picture of where I'm super inefficient. And that's just a base case example, but a real one, literally from the last 48 hours.
And Ian, so today US is facing a lot of this talent crunch because after COVID, the admission has dropped. Also, there is an Accounting Today's research paper which says that almost like 75% of the CPAs are going to be baby boomers in next 10 years. So, with so much capacity constraints, of course, the outsourcing industry, the offshoring industry is tremendously rapidly growing, right? Now, with the advent of AI, right, there are two big shifts happening. One is AI and the global talent, right? But what's happening that in the firms that we work with, or the ones that is witnessing a real difference, are the ones that use both the elements together. So, how do you look at this AI and global, staffing solution as a problem to the capacity for the firms? Are
Yeah.
these two to be looked very, very distinctly, or you look at together to, what is your opinion on this?
I think it's a complicated one. The interesting thing is, having been at Zero, where I was leading North America, but we had operations in all Commonwealth countries, essentially West North America, and then Karbon, we started as a global company as well. A similar footprint is when you look at outsourcing was more aggressive in Australasia first. It then spread to the UK, and then it came to North America after that. And there's different reasons for that. There's essentially more familiarity with what it is. It's also technology enablement, complexity of the particular jurisdiction. And so outsourcing has been strong for quite some time. It's now gotten stronger in the US more recently. And outsourcing has been really effective in terms of being able to augment the team, especially in sort of the more manual sort of preparatory work that needs to be done, because a lot of the US firms, we'll talk about them specifically, retain the client management as a direct facing function with the staff that they have locally. That actually has even changed now in the last couple of years, as it's quite easy we're doing everything virtually anyways. And the outsourcing has been able to more move up the chain into client-facing communications, analysis, and even engagement. And in some firms, again, I have it in my firm. We don't have outsourcing, we have insourcing. I just have different teams across the globe. They operate just like any other team member, whatever body or seat that they're in. So that has continued to change. It will continue to change in the accounting profession. And with a shortfall, that's necessary. You need the people that can reason. AI then becomes another avenue of that. It ultimately starts as looking at those particular things that can be done repetitious, again, as that lower sort of manual tasks, data compilation, injection, information. And what does that mean for the people that were doing those types of work? Well, again, it moves it and it accelerates it up. Again, if we were in a market where we had bodies in abundance in any one of those given rungs as we move up the hierarchy of the firm, we'd be in trouble, but we don't. So what happens then is if you look at what's happening in, say, it's the Philippines or India, or maybe it's in South America where some of these outsourcing are happening, you're getting much more capable and front-facing workers that can essentially change how your structure of your firm is going to be. So what I see is the firms becoming less a US firm or Canadian firm. I see them becoming more global firms, and they're having to change their employment models to be able to handle contractors, outsourcing, insourcing, and then again, AI components that sit within that team remit. And that's the sort of transformation that was occurring. So it's complicated because it really depends on how the firm owner, and this goes back to the book and the intentionality, what is the type of firm that you want to run? What are the most important values that you want to have? And then how are you going to structure that firm with not only the systems, but the people, the organizational design, the strategies, the operations management? All those factors then transform what the culture is going to be and how the firm is going to make revenue and ultimately drive profit.
And also, there's a lot of talk regarding AI versus offshoring, or, AI plus offshoring. So how do you look at the relationship of people with AI?
It's because there's this concept that some firms I've talked to will say, okay, my first step is I need to take the operations and I'm going to move parts of it out. Let's say it's my bookkeeping side. I'm going to move that and outsource that. And then as AI transitions and becomes more capable, I'm going to then swap the AI for the bookkeeping outsource function that I put in place because it can just do the job. That's not how it really works in practice, because what happens is you have to prep the work, you have to review the work, you have to deliver the work. And that review step, again, in a world where you don't have 100% accuracy on what's being happened, becomes that much more important, because you need to be able to detect the anomalies to ensure that the quality of the deliverable is being done and given to the client, because there's liability issues there if the tax return is done incorrectly. There's relationship issues that occur there. So I actually just see that the evolution that occurs is the capability, savviness, the importance of the people that are involved in that, whether that was in an outsourced function or within the staff members that are internally in the firm, whatever locality that they're in. But the reality is the firm that we have yesterday doesn't look like the firm that we have today, which is more in a transitionary state. And the firm tomorrow, whether it be a year or 2 or 5 years from now, they all will look very, very different. But they all will take on an embodiment of what the entrepreneur leader has predetermined of what they want it to be, whether consciously or subconsciously. And that's where, again, the reason why we wrote the book was that intentionality, that purpose that you're trying to drive is going to either make your firm be a leading firm or a lagging firm. And that has to take into account the technology shifts, but also the human capital shifts that are occurring literally at this moment in time.
And when we talk about the modern firm, where there is a shift in the human capital, shift in the technology. So what do you think, what structurally needs to change when we talk about the modern accounting firm versus today's accounting firms?
The biggest problem for firm owners or the entrepreneurial leaders in those firms is the realization that the firm, once it gets larger, becomes more than yourself. When it's small, I can control it. I know where everything's at. But as soon as you get to that 8 to 20, where we call a scaling plateau, you either learn to delegate or you're going to be stagnant. And that delegation, that ability to bring others in and scaffold, that is the thing that releases not only the capability of the firm to be getting better heights, but it also allows for all the thoughts and voices in your head as a leader to be able to dissipate and be able to transition. That is the very hard thing for many of these firm owners to accomplish. Now, when we go forward in time, those things don't change, but I think the biggest power is you can create a firm that will be 8 to 16 people in size that could take on a mid-sized firm today, a firm that might be 40 to 80 people in size, because they're tuned, they're using technology, they're using highly capable resources and a very focused and niched approach to solve a certain segment of small businesses or individuals that are their clients in a very prescribed way, in a very highly repeatable process, while still providing a high level advisory. That is the big shift that's going to happen. While firms have gotten bigger, a whole new guard's going to come in this new era that can rival a size that might be 2 to 3 to 4 times larger, based upon how they've crafted and developed the underlying system that supports them. That's the really exciting thing.
Yeah. So basically what you are talking is that the modern firm needs to be intentionally designed for, certain niche or certain customer segments. That's right. How the efficiency will increase. That's how you will be able to kind of scale and, serve your customers better.
Yep. So in the book, we broke it down in a logical order. First, you have to take stock of who you are as the leader, what you want, what's your outcomes, what do you want to accomplish, what are your goals. Then we go into, okay, with that being said, what does the organization structure look like today, tomorrow, in the future? What is the scaffolding that's required based upon the growth ambitions that you have? But then the next piece on that is everything is driven by revenue. Your revenue is so important. So where are you going to get that revenue? How are you going to get new revenue? How does that new revenue fit within the ability for you to deliver that revenue? So the revenue then has to match with the capacity. And that capacity is set with the types of resources that are best tuned to deliver that revenue in the most efficient, cost-effective way to drive profit. And so you then hire certain people of a certain type to do a certain thing for a certain audience in a certain segment. And because of that, it inherently creates a niche sort of focus on revenue, which then ultimately can create good spoils or again better rents or less rents, depending on how you then paired with that. And then the operations management layer is the next piece of that. By how are you going to manage that on a day-to-day? How are you going to plan for that in the future? That best optimizes the revenue generation with the supply curve or the capacity that you have, that then it creates the most profitable firm, not necessarily the largest firm, not necessarily the highest volume in terms of client. Those are all vanity metrics, but looking for the highest profit for the purpose of the firm that you decided to build. And that's why we use the sort of visual of, think of a landscape. You look at a mountainscape, and shockingly enough, we talked earlier about crossovers. I was in Nepal for quite a bit of time. And so in the book, we talk about Nepal. If you look across the mountain range, you'll find that the tallest peaks, when I was there, was Annapurna. It doesn't sit on the right, it doesn't sit on the left, it doesn't sit on the corner. It sits right in the middle. So your optimal point, your global optimum, doesn't sit on the largest firm you can think of. It actually sits in the middle, whichever your desire is. And so I think that's where a lot of folks get wound up on, we need to grow at all costs. No, you need to figure out what your ideal size is going to be based on what revenue you can generate at a high profit.
And so Ian, as we come to the closing of this podcast, so let me ask you this, if a firm leader is listening today and he wants to start building the next version of the accounting firm, where they should really start from?
When you go to actually, if I started a firm today, it's all about who's going to buy my services, right? And I don't have much to be able to leverage. I'm going to try to take whatever revenue I can get. Now, the revenue I can get is depending on my technical expertise. So most accounting firm owners are a technician by trade. I either can do a great tax return, I know how to advise, and I can do the accounting for a particular small business. There is something there that makes me unique, and that comes at a premium cost. And so I'm going to start there, and then I'm going to try to pull as much revenue as I can. That's where we go from a single person firm to maybe, I might have to bring in, 3, 4, 5, 6 other people. And the question is what type of people do you bring in that first starting point? And where do I want to go? Do I want to be a lifestyle business? Do I want to be in a very thoughtful, strategic, organically growing business? Do I want to be entrepreneurial and grow really quickly for whatever reason that would be? But it does come down to what type of clients am I courting and I'm able to get the highest value from. And what are the bodies I'm going to need to be able to deliver the deliverables that I'm promising to do? Are they going to be requiring people like myself of a similar technician capability? And what's the organization that's going to have? If I have a lot of really expert technicians, I might want to have a flat organization with less people, so it's more intimate, and therefore I'm going to cap the size of my firm, and it's going to be less than 12 people inside. If I'm trying to do things in a broader remit with clients of all different types of industries and sizes, now I might want to create something with economies of scale, with a bigger hierarchy and structure to it. And I'm going to need to get junior members, senior members, and leadership members to be able to make that happen over time. Those are very intimate decisions, and those are the ones that the firm owner needs to have. The technology is a later discussion, because the technology underpins what the business wants to do, and you're going to pick those choices that best enables the humans in that equation to be the best that they can be. And so we generally start with technology first, and then the understanding of the culture of the business second, but that's perverse. And the reality is the processes happen between those two layers. So again, you want to think of the organization, the culture, what you're trying to build, the processes to serve, and then you can think of the technology that you want to bring in place. And that's the thoughtfulness that if I was to create a firm today, I'd want to step back and think about all those things clearly. I will adjust it as I go forward in time as the winds of change come, but that thoughtfulness will lead to a much better outcome as you go forward in the years to come that most people don't get the benefit of at all. So that's kind of, why we wrote the book, was to explain why some firms were able to do that really successfully. And while the 95% of all firms don't do that successfully, and that's what we want to try to get that word out so they can be more successful from the start.
And in fact, in the last 1 year, I would have met like 8 to 10 people who are non-accountants have started the firm. Okay, so they would be from either the private equity background or a business or entrepreneurship background, and they think very differently, right? So they want this technology from day one. They look at offshoring from day one, so they look at all the new tools, technology, concept, structuring is very, very different from the way, the normal traditional accounting practice have grown, So,
Yep.
so tell me a little if you had any kind of an experience or conversations around this with anyone.
Yeah, we in my company we service firms of all sizes,
Mm.
including private equity and larger firms. And what I find interesting is that sometimes having an outside perspective can give you unfair realization of revenue and so forth, because you're not thinking of it the same way. At the end of the day, though, you're always going to be successful when you think of your customers, your clients, and what they need and what they want, and figuring out how to best deliver that overall. And for some of them, they start from, oh, we're going to get this technology stack. But the reality is, how am I going to get that technology stack to be able to create the deliverable that I've got to get to the customers that are paying me money? And that still is, we're going to require humans within that loop. And which humans are going to be the right ones to be able to deliver that in the right way and be able to create the relationship. So the biggest thing from an accounting firm perspective, and what I try to coach people on, is your most valuable thing are twofold: the relationship that you have and the processes that you have to serve them. Because those are the things that ultimately drive referrals, recurring revenue, and everything else. And so there are different ways to solve that with different mindsets. Again, the PE side of it, they want to do it at high volume and scale. If I'm a smaller firm, I want to do that at lower volume at higher price. And so which way am I going to do that successfully? And again, technology is just a tool in that. And so again, what is the core IP of an accounting firm? Start from that, and then kind of build out the equation that's going to give you maximum value. And that's where I think some folks who are coming from the outside lose sight of where the revenue is generated and how it's generated, and the expectations of those clients.
Fantastic. So what you are saying is that you need to be really revenue focused, really client focused, right? So
Yes.
maybe the scaling isn't about doing more, right? Maybe it's about designing it better. Ian, it was really a fantastic conversation. Thank you for joining this Smart Outsourcing Talks, and it was lovely speaking to you.
Thanks for having me on. I really appreciate it. Great time chatting.
Thank you so much. Take care. Bye-bye.